Okay, guys, we're going to do coffee with Scruff. And I'm going to break this into two parts. I was requested from the last one to do a part two. Let me kind of show you. Here it is here. So it's a little salute to Winners Never Quit. That is a fantastic name, by the way, because you're right. Winners don't quit. You know, if something goes wrong, you've got those that'll sit in the corner and suck your thumb. And then you got those that'll just roll the sleeves up and get on with it.
Are you sure?
And so that, I think, is a super name. Okay. The bit that you got wrong is where you thought I look about 38. Trust me, I'll never pass for 38.
Fuck no!
I think that ship sailed a long time ago. But what was asked was a part two on the topic and make a video about probability aspect of trading. Sure can. And if you want to see where it came from this video here, why Forex traders fail. Okay. So I'm going to do that. But before I go into that, I'm going to update my Vanguard. Now, I've just finished working this morning. It is Sunday. Now, if you look at this, and I get pulled all the time about, your win rate, it can't be that good in one thing and another. Well, I'm going to show you something. This is where we're up to. Now, this is fully documented, the Vanguard that I'm doing. And the guys in the squad have seen it from day one right through. Okay. We started with 200 quid in January. And I've got it up to, well, nigh on 8 grand now. And we're only on March 16th. Now, I'm going to slow down a bit because I did have a goal set in mind. And that goal was this, to get to 4.5 grand to pay for Benidorm. Well, that particular account, which I'm going to top up now, has already got 4 grand in it. All right. It's losing money at the moment, as is all the stocks, but I'm not bothered because I'm doing a DCA on that, and I'll explain that in a moment. So, what does this represent? Well, there's your figure, 2646. So you can see that up there. That's what the balance is. We've had money out of it. You know, if you come up through this, I flick it up, you start seeing the various little costs and everything that's inside it, or at least you will when the computer decides to start waking up. There you go, 350 out of it, or at least it was. It's shot past it. Okay. There we are, 350 past it. So it's doing quite well. So what's the account? Well, it's this one. I use BlackBull, and I do kind of recommend it. You'll find links for it down below because these have high leverage. But what I'm actually doing is moving the leverage down. Let me kind of explain that a second before I move forward. If I come on my summary, I'll tell you why this is. It's getting confused with my other chart that's on. Give us a second. Let me switch that off. Okay, there we go. You'll see that I'm building and I'm going to lower the leverage. So what I do at the end of the month is I shut the account down and then I open up the next one with a lower leverage and I start with a baseline. So even if I lose anything in that month, I've already had money out of it. So I can fund it again if I have to. I haven't needed to. And then each time, as you can kind of see, the starting balance is increasing each time. Just means I've got more money to start with at the beginning of the month. I can increase my position sizes slightly at the beginning of the month and then follow the same path. So what are we going to be doing? Well, if I flick that back, we're going to be taking, well, I'll just kind of round it down to 950. But my wage for this week is 950 quid. I don't think that's bad, actually. So let's get back to what I was showing you. I've been working this morning. So here, this is this morning. Okay, so well, I'll tell you what, we'll move this up to there. So that's everything I've done this morning with one sacrifice trade. And it's pulled in 141 quid. Now, if I go back sort of to the beginning of the month, there's the opening balance, what I set, 750 quid, which is the baseline. Now watch. Right, I do get it wrong. Okay, you can't win them all, but you do. But I sacrifice trades. But look at all the blues. All right, all the way down. A little bit of red here. Do get it wrong. You know, but all the way down. There's the 350 withdrawn. All the way down. Plenty of blues. Plenty of blues. Plenty of blues. A little bit of sacrifice there. Plenty of blues. Plenty of blues. That was a bad day, but that lot was quickly absorbed in all of this, so it wasn't a big problem. It's just one of them days that you need to get a stretcher and you're being carted out. But all the blues, all the blues, all the blues, all the blues, running down to what you've just seen now with that sacrificing. And then there's the profit. Okay, 2,284. Okay, and then you've got a net profit after your costs and one thing and another, and that's represented over on this side. Okay, so I'm quite happy with my profits. And then there's the balance. So what I'm going to do now is I'm going to log into the BlackBull backend. This is actually going to conclude what I've been up to, because I'm now surpassed the 4,500 actually in the Vanguard, and I'm going to put it in there as well. So give me a second while I log in.
Well, we're waiting.
Okay guys, so it's our little wallet, but we need to flick it up onto trading accounts. There it is there. So what we're going to be doing is we're going to be transferring money out of here. So what you do is you just transfer funds. Where's the source? Well, the source is there. Where's it going? We're going to put it into the Scruffy wallet, and it costs you £5 to withdraw your money. So what we'll do is we'll take 953. Sorry, put that in backwards. 953 out of there. Submit. Proceed. Okay. Now that goes into the wallet, which is here. And then I can withdraw the funds. Now where am I going to withdraw it? Well, if I withdraw it down into sort of the debit card. Reason why you do that is quicker. And we're going to take 955 out. So it's going to ask me for my bank details. So I'm just going to pause it for a second. Okay, so that's it. Sent an email. You just verify your transaction, gets accepted, and they dump that into your bank account. Okay, so what I'm going to do is now I'm going to go into the Vanguard, and I'm going to show you me putting money into it, and then I'll update the sheet, and then we'll get into probabilities. Okay, so let me do that now. Okay guys, so we've logged into this. It's actually taking a hit at the moment. We had it up to 108,000, but with the downturn on the major indexes at the moment, it's actually wiped quite a bit out. Am I worried? No, in fact, it's a good thing. You make more money when the market goes against you. It's called DCA, dollar cost averaging. And you see me do this quite a lot on my trades. And that's something that we're going to talk about with probabilities. I'm actually happy that it's gone against me, because it means I can now buy in at a better price. So I'm going to get a hell of a lot more units for this 950 quid than I normally would. So what we're going to do is we're going to look at the investments, which is here. And you can see that investment is currently down. But performance-wise, if we sort of go back a year or so, we can see it is steady growth. I mean, it got up right up here at one point, you know, and now it's tailing off a little bit. All right, so I'm not really worried too much about it. So what we're going to do is we're going to top this up. So we're going to top that up. You know, will ask me for my bank details, so I'll have to pause the camera again. And we're going to put 950 in to here. Okay. And then it's going to ask for the payment method, which is a debit card. So I'll just fill in my details and I'll come back to you. Okay, so that's it. That's gone in. What it'll do now is on the next available price, it'll buy me units tomorrow. when the market's open because it's Sunday afternoon. But if we come back to the investments and click the portfolio on, what you'll see now is the cash balance has jumped up, and obviously that balance has jumped up as well because we've just dropped that money in. Okay, so what I need to do now is just come on to my little Vanguard sheet here. I've added some money in throughout as well because I do what's called save the change, which is this bit here. You know, rounds up your money just into your bank account. And also Quidco. Quidco is a cashback app. Every time you use Amazon or something, you get a little bit back. And if you want a link to it, it's in the comments. So have a look at that. And we just dropped 950 quid into there. Okay. So what I need to do is just have a quick look to see what the balances are so we can see it. So we're at 4,033.63, but the cash is 971.01 because they're the two that we track. So what we've been doing with that small account is this pot and the cash pot. Okay. Now when I update that and then put it across, there we go. We've now got a total of £5,000 in the Vanguard, which is smashed through the target. So we stormed through it. Job is done. Got nowhere else to go with this now. This challenge, well, if you want to call it a challenge, it wasn't. I was just kind of doing it to show you that it was feasible, is now complete. And I'll just keep doing it for myself in the background. So what's the moral behind that before we start having a little look? It was really just to show you what little steps and a bit of thought can do. Now, I showed you the statement to show you how consistent it was, because that wasn't 2 or 3 trades. It was hundreds of trades. And if you go through the series, you'll see there's hundreds of them. And my rule of thumb is very simple. I take what the market is willing to give. In other words, I go from one point to the next. I don't try and hold on to it like Billy Big Bollocks. I just find that, well, I just find that dumb. You know, if the market's only willing to give me 10, 20 pips, I'll take 10, 20 pips. I'm happy with that. And as long as I do it consistently and know when to walk away, I'll be fine. And that segues into probability. So my coffee cup's empty, so we'll switch the camera on and we'll have a walk downstairs and we'll discuss probabilities. Takes it all, the loser stands and falls. So, probabilities. How do I best describe this? I would suppose it's less is more. Now, what I mean by that is, if you're going at the charts like a machine gun over and over, well, there's a high probability you're going to fail. It's called overtrading. If you up your position size that's greater than the account can take, the chances are you're going to fail because that's oversizing or over leveraging. And if your expectation is greater than what the market is willing to give, again, you're going to fail.
Jump out the closet, chop your little head off.
So probabilities actually comes down to not the word probability, something else. Common sense.
No way.
So if you know overtrading can kill your account, half your amount of trades you take. I take personally 1 or 2 a day. I look for 1 or 2 a day and I work hour to hour. That's simple.
Isn't that logical?
Okay. Now I might have multiple product or multiple positions, but it's only 1 or 2 trade ideas. And I'm looking to get from that point to that point, and then I work from zone to zone, hour to hour, based on what the market's willing to give me. So that's a probability. Now, the next part of it was, well, what about sizing the account? Where's probability in that? Well, it's obvious. Just because you've got £1,000 in your account and you've got 500 to 1 leverage, sort of like that BlackBull account we've just been looking at,
Doesn't mean to say you should be putting on a full lot or £10 a point. How long do you think that £1,000 will last if you're wrong? Not very. There's a high probability it'll be wiped out. So again, sizing comes into it. And then an over expectation. Well, you've got £1,000 and you want £1 million from it. Well, it can be done. It's just not going to happen overnight. So you've got to apply common sense to it. Where will I be in 5, 6, 10 years? Not where will I be in 5, 6, 10 days.
I don't know where you get your delusions, laser brain.
So you've got to apply common sense. So we'll put that to one side and we'll assume that you understand common sense over probabilities in what the markets are willing to give. But now we'll concentrate a little bit on the charts themselves. So what is a high probability setup? Well, a high probability setup comes from multiple data points. Now, I see a lot of newer traders, and certainly traders that have been spinning wheels for a very long period of time. They all have a common trait. They zoom too far into the chart. They're looking at 5-minute charts, thinking they can see what's going on and that they're going to catch every dance that the candle makes. No, there's a high probability you're going to get it wrong, not get it right. Why is that? Because often the market will be moving in the opposite direction before it's going the right direction. It does it all the time. It's called rotation. Now, inside of that, you've got to understand what the bigger picture is. Well, if the bigger picture, just for argument's sake, is to the downside, but you're seeing the markets move to the upside, you'll naturally jump on that train and you think, brilliant, we're away, we're off to the races, because the indicators are telling me that. Well, of course they're going to tell you that because they're on a low time frame and they're just following the price, and the price happens to be moving up at that time. So therefore, you follow it. So the chances are you're going to be in a train wreck because the actual bigger picture is probably telling you it's going the opposite direction. And your indicators won't tell you that. But there's something that can. And it's your levels.
What?
Let me explain. See, I put key levels in, and it's my secret sauce. You know, if I've got those levels right and I've got my fibs in place, I know exactly where that market is going to be. Not in the next hour, but in the next few weeks. Why? Because an indicator stops where the price is. I can look at a minute chart, think I'm zoomed right in, but the indicators stop on that minute. Now, the level doesn't. It protrudes into the future. So if I've got a feeling that the market is genuinely pushing down, where's it going to go? It will look for the next stalling point. And that next stalling point will be the level that's protruding forward, if you know which ones to draw. Now, you draw them on an hourly 15, 5-minute, means nothing. Jack shit, right? So you need to be going out to your dailies.
I'd buy that for $1.
Look at your daily levels. Thing called daddy levels. Now, the daddy levels is the open, close, high, low, and midpoint, or axis, or pivot. You'll often hear some people start saying, oh, it's equilibrium. They don't even know what equilibrium means. Equilibrium is two opposing forces balancing each other out at a point. No, that's not what a middle is. A middle is literally a pivot, like so. So at best, it's what's called a meridian line, same as the way a compass would work around the globe to figure out which is north, south, east, west. Very, very simple. So if you know what the daily's up to, until it tells you otherwise, that's probably the dominant trend. And that dominant trend will correct into itself. So you'll be daft to go against it. But if you are, there's an element that you need to know. And it's what the probability of target is. Now, the probability of target means, well, where's it going to stop? Well, if it's pushing up, it'll be the level that's above it. So what will that level create? If it's going back to trend, a high probability of sell. Now, that's from one time frame. Now do that across multiple time frames and work out an average. And if you can work the average out, you've just put the edge in your favor. That gives you a high probability trade. Now, if you've got a high probability trade, couple that with a sensible target, you can actually be what's called market neutral. So yes, the market is pushing down. You know it's moving up, but you know it's against the grain, so you target effectively. And it means you can trade both directions, but the upper target is going to be pretty small. The continuation target can be bigger. It's about being market neutral, but actually giving what the market is willing to share. Simple stuff. Now, to me, that's what probabilities is all about. It's about looking for averages and then weighing up the odds, and then quite simply, trade less. The less I trade, the more high probability I've got of success. And that's it. I've just shown you my statement right the way through. There wasn't a lot of reds in it, was there? I took what the market was willing to give at the right time, and I walked when I was done. So as soon as I'm finished, like I'm finished for the day, I've done my £100. I'm more than happy with £100 on a Sunday morning. And it was from peanuts. But the sizes were peanuts as well. So again, goes back, everything's connected. You know, keep my position sizes small so I don't kill the account. I don't overtrade so I don't stress the account. And then when I'm paid, I walk and it don't stress me. And why is that? Well, because I love my job, but that's the key word. It's just a job. Don't have to do all the day. You know, I can be finished for 11 o'clock pretty much every day. And then I'd spend time with the one thing that I really do love. That's my wife. You know, I love spending time with Joanne. I really do. And that's why most people get married, because they want to spend time together. I'm fortunate. I spend 24 hours a day with her.
Big tits. Huge tits.
You know, people question my marriage all the time, but I don't think many people can spend 24 hours a day with their partner. Certainly not the way what I hear, but we're best friends. We take the mickey out of each other. You know, she's constantly going, "Oh, you dickhead, come here," and I'll call her a cow and all that sort of stuff. But to the outside world, it's like, oh, that's terrible. You're a terrible person.
How does your missus put up with you? Must be my legendary prowess as a lover.
You're not as happy as I am. I'm as happy as a pig in shit. And it all comes from that screen, because that screen gives us the ability to do what we want. And we're off to Spain next week. How many holidays have you seen me take this year? How many of you what? Right? So what's all that got to do with probabilities? It means I've got focus. My focus is I want to be in and I want to be out. Once I'm in and I'm out and I'm paid, that means my high probability of a good life increases.
I love it when a plan comes together.
That's what trading should be about. Your desire to trade should never outweigh your reason. And my reason sits there, makes me happy, makes me coffee, because we all know Scruffy likes it coffee. And that's it. But when I'm coming to the chart, I'm only looking to be high probability. I know that sounds odd, and I've said it a few times. It's because it's on my mind, and I'm trying to think of a way that I can trade in such a that it resonates with you. Now, if you're going at it like a machine gun, are you going to pay for your holiday? No. If you go out like a machine gun and you lose your money, is your other half going to be happy? No. So what's the high probability of a unhappy life? Pretty darn high.
Out of the frying pan and into the fire.
So trade less, guys. Less is more. And then just take those high probability setups, have a good life, stop bitching, and smile. It's my thought anyway. So I'll cherish your thoughts down below. I never script any of these. If anybody's stayed this long into the video, they probably won't. As soon as they figure out there's no magic pill, they're away, which is fine. I've got no time for them anyway. And I make a big point about that in the group. If you come into the group just looking for signals or to follow somebody's trades, there's a high probability you're a failure. But there's also a high probability that you're not a particularly nice person. and I don't want you in there. So when people come into the group, they all have a single focus to learn the craft, understand the craft, and step towards a singular goal. So there's a high probability of that group being good. And it is. I'm really proud of them. I love the guys, which is why I'm doing sort of Scruff Live. We did one in February. It was a massive success. We're doing one in Benidorm again this year, Scruff in the Sun. And we're doing another one in June. And why? Because I genuinely want to see those guys succeed. I really do. And I cover a lot of the cost of it myself. So you tell me. I mean, am I getting this wrong somewhere down the line? Maybe I am. Anyway. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.